Good afternoon. In this video, we're going to go over this past week's trades and the weekly recap. Before I get into the video, if you're not in the room, you can find the link in the description of the video and in my bio sections of the social media accounts. Also, please subscribe to the channel and like the video. These take time to make. This is how you learn. This past week, let's see, I did 16 wins, 6 losses for a win rate of 72.73%. Very low considering I usually do 85 to 90% every week. But also, I did not trade as much as I normally have. I've been trading anywhere from, lately it's been about 25 to 30 per week. So, just hasn't been, the numbers haven't been up there. Just the market's been going crazy. I didn't feel like trying to catch the top or chasing. So, I pretty much sat on the sidelines most of the week. So, but yeah, 70%, 72% is very low considering what I've been doing every week. It's just not been a very good week. Had a red day on Friday and Monday. So, but anyways, we'll go into the trades. You can go on Twitter and you can see the timestamps. Now on the trade ideas room, I said Monday. SPY puts it in 392, and let's see which day is Monday. The 23rd right here. Now, I've been thinking the same thing that. SPY has these little pops, keeps shorting the pops, but this past week it had a massive short squeeze, and it actually was going green on bad news. One of the days, I think it was Thursday, there was nothing but bad news, and just SPY just didn't care. It was just raging, but we'll get into that when we get into it. But Monday, I said what, 392, which is right here. Oh yeah, I can see it right here. You can see the support right here, support right here. It did dip underneath it a little bit, but I said 392. I've been waiting the first 10 minutes for the most part, but I did grab it right at, looks like I grabbed it right before the 10-minute candle fully formed, so I grabbed it down in here. Didn't drop much. I had the 392 puts at 270, and they went from 270 to 298. So we only went like almost 30 cents. But 30 cents on SPY, I mean, you got to think we've been getting spoiled with the volatility of these 10 to 15 point ranges, because if you were trading before Trump, SPY was only trading in a $2 range. Through $3 range was considered, fairly wide. But now a $3 range is considered very, very narrow. So if you were trading before Trump, you know what I'm talking about. A $3 range was pretty exciting back then. But now a $3 range is nothing. So yeah, when you get 30 cents on SPY, just take it, because that's equivalent to about $3 on SPX. So because SPX moves 10 times faster than SPY. So, you did get a little bit of a drop, then it popped back up, then it dropped again. So, sorry, I'm yawning. Anyways, yeah, that was the first play. Then I took SPX puts at 1018, which is right here, 1018. I got the right day, first of all. Yeah, I do. Why did I wait till 1018? Oh, I must have caught the double top up here. Okay, I don't know why I didn't grab it down here. Maybe I just didn't think it was gonna fall through. Maybe I don't know, but I would have grabbed this, because you had the drop, then it faked out, then it faked the breakout of the pre-market highs, and it came back down to lower day pretty quickly. And usually when it drops and does a double fake out on both ends and comes down the next time, that it's usually going to break. And it did break, but just not that much. But you thought that there would be a bigger run, because you have a head and shoulders. You get the left, the head, and the right shoulder right here. So that's why I kind of liked it for a dump, but it just didn't dump that much. It was just very surprising that it didn't dump nearly as much as I thought it did. And I think that I was going into the day thinking that this was going to be a range day. But yeah, I got it right at, I mean, you know what? Yeah, I got it right up here, I think, right at the double top, that it came back down and rocketed back up. I'll have to look at the 1 minute chart on a 5 day, because um, you can see the volatility wick on Monday. Let's see, right here. Now, what time did I get it? 10:18. Right here. Oh yeah, okay, I see where I get it. Yeah, right here. Came back up. This is where I grabbed it, right in here, and I caught this little drop right here. Okay, yeah, this is what happened. It bounced back up. You can see right here a little bit of resistance, and I grabbed it right here. Probably was a little risky for me to grab it right there, but I grabbed the 3,900 puts at $8.30, and then went from $8.30 to $12 just in that little drop. And I believe that I got close to at the money at that particular time. So gotta go back to the 10-minute chart. I don't look at the 1 minute. I'm just doing it so you guys can see what I was seeing at that particular time. 23rd right here. Then I grabbed puts again at 10:28, which is right 10:28. Pull this up a little more. 10:28 right here. Yeah, right here. Oh, I see what I did. Yeah, I added more. Okay, because I got the double top right here, double topped right up here. So I grabbed the 3,900 puts again at let's see, 10:28, which is this candle right here. It's not, somehow I paid $10. I don't know how I paid $10 when I had it at 8 when it was lower. It was down here. But yeah, okay. Well, yeah, see, the price is higher. I don't know why the puts were higher. Just trying to see. Well, anyways, so yeah, I had the 3,900 puts at 10.90. I must have got it down here, because I got it at 10:28, so it's this candle, so I probably got it close to down here. Then it popped. Then I did average down. I added more at 6, bring my average down to 665, and they went from 665 to 860 in that drop. So yeah, I probably somehow I paid more here, and when it popped, I averaged down and was able to get out. I've been doing that a lot lately. I got to stop doing that because I never usually do that. But I guess one of the reasons why I have been doing that a lot lately is because of SPY likes to, pop, then it will drop. So if it's spiking on me, I've been shorting the pop. So if it does spike on me a little bit, I have been kind of averaging down a little bit, because of the fact that it's been shorting the pops and coming back down. But this past week, it hasn't been really doing that, and I took some kind of unnecessary risks this week. So, but yeah, that one actually did pay off, going from 665 to 860. Then I ended up grabbing, let's see, SPY puts again. I think I went into this day thinking that we were going to have a small range day, because we haven't had any small ranges at all. I mean, if I look at the daily on the left side, that the daily candles have been pretty big. We haven't had any small narrow days. I mean, what is this right here? This is what, 402 to 48, so that's a $6 day right there. We haven't had any. I mean, $6 rate. This is the last small day right here, which is what, 413 to. That's still a $5 day. I mean, that's $5 and $6 has been kind of being the small range days lately, but yeah. So yeah, I got thinking that this was going to be a small range day because of staying in a range, and it just took off. But yeah, I grabbed puts again at, let's see, 11.11, which is right here. Now let's see, why did I grab it right there? 11.11. Just blow it up on the hourlies. See, there's a reason why I grabbed it there. 23rd. Might have been this pivot right in here, which is 397.22. 397. No, it's not even up there. For some reason I grabbed it right here. Not quite sure why I grabbed it right there. It might have been the RCT trend line. It does move. As price, because I'm looking at it at the end of the week, I'm sure the RCT trend line has moved, but maybe that was it. But I grabbed it right here. I grabbed the let's see, the 39.30 puts at $8 right in here. It might have been, you know, where it popped up, it broke out and it started to come back down. This is probably where I ended up grabbing it, because it did a fake breakout. It broke out just a little bit over this area, then it came back down. When it probably started showing weakness, this is probably where I grabbed it. RCT trend line could have been right here too. Looks like something was right here. But anyways, yeah, I grabbed it right in here. And actually I grabbed it in this candle because this closed at 11.10. But yeah, I grabbed it right here. Probably grabbed it right here, then it popped on me. So yeah, I had the 870, then I added more at 530, which is, let's see, 1132. I added 1132 right here. Yeah. Oh yeah, I took this. Yeah, I took this loss for no reason. Let me just double check to see if this is when I stopped out. Yeah, this is when I stopped out on, and I remember stopping out of this one and being kind of annoyed by it. But yeah, I averaged down. Okay, I bought it right here. Then I averaged down into this candle. Then I thought, you know, it was gonna go my way. Then it ripped on me, and this is where I think I actually stopped out up here, like at the higher day. Then it does this right afterwards, and they went green. So, but I took a loss on it, and I shouldn't have. So whatever. Very annoyed with that. Actually, you know what? It looks like I averaged down a few times. So yeah, I bought it here, averaged down in this candle, and at 12:25 I averaged down right here in this candle. Then it popped on me, and I think, yeah, okay, I stopped out up here. I remember stopping out near the higher day, and then it just ended up stopping out. Yeah, I just did not do well on that play. Yeah, because I stopped out at 340 and my average was what, 520, because I bought it at 870 and I added more 540 and I added more 470, and I brought my average from 870 to 650 to 520. So then I ended up stopping out at 340. So yeah, I took a almost a $2 loss on that. But it did go green, and I do remember stopping out and thinking right after, literally seconds after I stopped out, the thing dumped, and I was very kind of annoyed with that. So 11:55. Yeah, it was this candle where I stopped out. I'm getting very confused. Sorry. 11:11, which is right here, right down in here. Then I added more at 11:32, which was this candle. Then it started to come down, and I added more into. I said it was 12:25. That's a different alert. It was 11:55. I added again. Yeah, it was right here. And this is where I stopped out right here. Yeah, I literally stopped out right at the top. It wasn't here. This is where I jumped into another play. But yeah, right here is where I stopped out and took my loss. Then it came back down. This is where it started to come back down right here. Then I jumped in with a new batch of puts, because originally I had 39.30. So I jumped into closer to at the money with 39.60 at 12.25, which was this candle right here. Because I stopped out here, I was very annoyed. Then when it came right below these candles right here, you see how he came underneath these three candles right here, the body, the wick, and the wick right here. This is where I grabbed the 39.60 puts at 9.10, and they went from 9.10 to 13.10. Then I grabbed it again at 1 o'clock, which is, yeah, I grabbed it, sold in this move. I grabbed them again at 1 o'clock, 1:16, which is right here. Just trying to think. Yeah, I got it here. I didn't grab it here. Came down, then it would pop back up. This is where it popped back up. Is where I ended up reloading because of the 20 EMA, and then caught this move down. I had the let's see, the 39.50 puts at let's see, $10.10. I definitely went closer to the money. At the money because of I needed to make up some of the losses I had. Then at this point in time, I made up the loss, 2 losses right here, but I ended up finishing the day with a loss. So yeah, I caught this move right here that ended up going from 10.10 to 15.50. So that was a $5 move right there. Then I decided to play puts again at 153, which is right 153 right here. Yeah, right here. I got the 39.50 puts at 770, and I averaged down at 150, 135, 135. Oh yeah, okay, this is where I remember doing this. Yeah, I got it right here. I bounced a little bit. I got it thinking it was going to reject this area right here. So I entered the 39.50 puts at 770 right here in this candle. Then I added more at 153, which is right here. And then it just chopped. It never went green. So it almost went green right here, but it just chopped. This entire thing just chopped it to death. It just didn't go anywhere, and I ended up taking another loss right there. So sorry for the confusion. I mean, when I'm adding all these ads, it looks very confused. I gotta shut my door. The weed whacker next door is very, very loud and annoying. Okay, hopefully that's not nearly as loud and annoying. But anyways, but yeah, yeah, I added so much this week. I kept doing it, and 2 of the ads ended up being losses. I gotta stop doing that. I either get it right or I don't. I just keep thinking that every time it pops, it's just lately it pops and drops to newer lows, and I've been adding, thinking of that, and just this week, it's just I shouldn't have been doing that because of they just haven't been working out. And let's see, Tuesday I had let's see, the trade ideas room. Just say to SPY puts under 391. I waited the first candle out. I played at 947. It took 390 puts, which is right here. And I had the 390 puts at 310. They went from 310 to 519. Then I ended up grabbing puts at 1023. Right here. You see, I had these nasty candles and it popped back up. It bounced a little bit, so I reloaded right in this candle. I grabbed the SPX 3850 puts at 560, and they went from 560 to 780. And then I grabbed them again at 540 at 1037, which is 1037 right here in this candle. So yeah, I bought here, sold this, then it popped back up. So yeah, right here they just went from 560 to 780 and went over $2 right there. And if you're up $2 on SPX, you'd be foolish not to take it. Just take it. I mean, yeah, you probably missed the big run, but you know what? If you sit there and hold for a big run, that you're gonna end up losing more than winning, because you don't know which one's going to be the big run. You don't know which one is going to be the chop, and you don't know which one's going to be the loser. If you knew which one was going to do what, then everybody would be a billionaire. It just is. This is the name of the game. You get to take what the market gives you. You can't hold and hope. You can't try to get greedy, because greedy pigs get slaughtered, and it's just, you don't want to do that. So yeah, I caught this move, popped back up, I reloaded. It was a little risky because usually when it drops and comes back up, they usually end up popping, and it did right here, but it didn't quite yet. So I reloaded right there. The same puts at 38.50, and I got them at 5.40 this time, and they went from 5.40 to 8.50. So they went up $4 and some change. Then I reloaded 11.52. I got spy puts at 11.52, which is right here. This is where it was. See the pre-market low right here. This is where it broke down right in here. Didn't quite get there. Came close. So one thing you got to understand is with the market is that it usually doesn't test the exact number. Sometimes it does, sometimes it doesn't, but most of the times it likes to undershoot or overshoot, and you just got to be aware of that, because market likes to trick people, and that's the name of the game, and that's what that's how they get retail traders and with their pants down. It's just overshooting, undershooting, and right here, and causing false breakouts and breakdowns. They do trick a lot of people with that, but I'm pretty good at reading stuff like that, and you can pretty much see it most of the time. But yeah, anyways, getting off track. 11.52 SPX 38.30 puts right here. They went from, let's see, I got about 690, and they went from 690 to 750 in that little thing right there. It dropped. It only dropped the VWAP, and didn't go any lower than that. So then I ended up grabbing 3,900 puts at a 145, which is right 145 right here. Right here, yeah. No, right in this candle right there. See, it's been wicking here and it wicked here, so I was thinking, okay, I rejected a little bit here, then it came back up, and I grabbed it right here, thinking that we were going to reject, but that's kind of risky. You can see a cup and handle. I think I saw it, but I just didn't trust it, because sometimes you get these bullish setups, and they end up being just not working out. They've been end up being a massive trap. And this week, or the past few weeks, that SPY just hasn't had anything to be bullish about. So any bullish setups I've been very skeptical of, because there's really not one thing to be bullish about. Rates are going up, inflation is going up, supply and demand is having issues. You got the war with Ukraine and Russia, Russia threatening Finland, Russia threatening the other NATO people that are trying to get NATO backing or get into NATO. Then you get China with Taiwan. You get so much going on, that bad economic numbers, massive misses in the ER for earnings reports. I mean, there's really not one thing to be bullish about, and we get QT coming this week, next week, June 1st, and there's just not one thing to be bullish about. So when you have bullish setups, it's just kind of hard to trust it, because you just think it's fake. So that's what I've been doing, is I've been just continue what I've been doing, shorting the pops, being skeptical of bullish setups, and took the puts right here, 3,900 puts they went from 620 to 720. They went $1. That little drop right here, you can see it popped up, came back down, then it dropped right here, then it popped. So yeah, you get the Fed came in and saved capitalism during the COVID crash, right around 210, 215. And they've been dumping, I posted on Twitter, the massive amounts of money, like $9 trillion into the market, holding it up. And now they're going to take all that out. So what do you think is going to happen when they take out all that money, or even a good portion of it? The market's just going to take a massive dump. So to me, still, even though we've had this insane run up, I think the insane run up this past week, it's just been nothing but retail, because institutions aren't buying this. They know what's coming. They've been actually loading why retailers are running it up. They've been loading puts, they've been loading VIX calls. They know what's coming, and retailers are just don't have a clue, and they're just FOMO. So they just you get the buy the dip crowd, the buy the dip retailers are just blind to have no clue what's going to happen. So, but yeah. So yeah, I did call it at 5 trades. Good day on Tuesday, not the best day, and I just didn't trust it. So I stayed out of it. Then we had FOMC on Wednesday. I didn't even trade anything until 1:12. Let's see. I didn't trade anything at all because usually on FOMC day we get nothing. I get nothing but chops. So I just said I ignored it. I was like, I'm not touching this. So I stayed out most of the day. Came back after 1 o'clock. I did take a play before FOMC, and I shouldn't have. And I took a loss right before it, and I was not happy about that. I grabbed 3,900 puts at 112, which is rate 112. Oh yeah, right here. You can see right here it has a head and shoulder set up. You get the left shoulder, you get the head, and the right shoulder. And I ignored it. Then when it went up to the 20 EMA and rejected, and it came back down, and it came underneath these candles and was coming right back to this area right here, the neckline, which is the 393.50 area. And when it came back to that, I thought for sure this thing was gonna dump, because I was kind of surprised that we were having this much volatility before FOMC. Usually we have nothing. We usually stay in a tight range. We usually get this kind of action right here within $1 or $2, and that's it. I was not expecting this, but I tried to stay out of it, didn't trust it. But when I saw this right before FOMC, sometimes right before FOMC, like the half an hour, even 10 minutes before it, you will get a little bit of a pop or a drop. And I thought for sure we were going to get a dump in reaction to FOMC coming up. But I got in here thinking we were going to dump, and it popped. So, yeah, it didn't work out. Then I had the FOMC strangle play. I had 3,900 puts at 330. And then I had 39.90 calls at 450. And when you first opened up, it popped. So when it popped, I sold the calls. Then when it dropped, I sold the puts. And the calls ended up going to 1335, and the puts ended up going to 630. So yeah, that ended up being a good play. Then I just, I ignored this pop. I'm not quite sure why it popped. I mean, they were saying we're going to get 50 basis points the next couple meetings. I think the market saw that somewhere in the minutes it said that they might not be raising. The rates increases could end sometime fairly soon, but it's ignoring the next few rate hikes. But yeah, because they said they were going to take away take the rates off the table, and if down the road that the market saw that as a good sign. I don't know why. It saw that as a good sign, but it ignored the other rate increases coming up 2 or 3 times before that, and it just, for some reason, it saw the optimism and just the hope and popped. I don't know. The market shouldn't have popped. There was nothing for it to be bullish about. But yeah, the market just seems to care when it wants to care, and it just it did. So then I ended up grabbing puts. The last play ended the day, which ended up saving my day. Well, FOMC did well, but I did really well on the last play. I grabbed let's see, SPX puts at 313, which is at right here. 313, yeah, because you got the red candle right here. It finally showed weakness. I grabbed it right here. The 4,000 puts. 4,000 puts, for some reason, every time I play them, I do really well. I don't know why. It's weird. But yeah, I had them at 870, and they went from 870 to 3170. So they went like $23 or something like that, and that drop right there. So that was a nice monster end of the day play. Then on Thursday, let's see, I'll switch over. I had Tesla. Let's see what I say. Tesla puts under 655 and SPY puts under 398. So we'll go to Tesla. I bought Tesla and I just ended up holding it, and it just went against me. So It went against me hard. Let's see, Thursday. Yeah, I said under what? 655, which is right here. So yeah, I came back down. 655. Let me blow this up a little more. Trying to see why I picked this level, 655. All this 655. These candles right here, okay. Tesla has been one of those stocks that where if it starts going right straight to the level for a breakout or breakdown, it keeps going. This was the first time I've seen in a while where it faked out. It dropped back down, got me in, then it popped, and then I held it, then it just ripped, and it ended up going to zero. So I had let's see, what did I end up having? Let's see, I had SPY 630 puts at $7, so I wasn't in it that much, but still I didn't get that one right. But then I ended up going back to SPX, and this is where I tried to guess the top. What did I type in SPX? I don't ever chart SPX if you know me, because there's no VWAP. Okay, I tried to grab puts at 1046. Let me just blow it up right here. 1046. Right here. For some reason, I grabbed it right here. What was the price on this? 404 rejection. Yeah, I can see where I grabbed it. You can look at the hourly. You see right here, this is where it's been having resistance right here in the 404 area. Rejected here, 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 and here. You can see it quite a bit rejecting this area. So I thought for sure, because it rejected right here, came back up, and can reject it again. I thought for sure it was going to do it, reject again. So I grabbed, plus we also had FOMC. It was, and the last time FOMC had a pop, it ended up selling off the next day. So I found it really odd that, you know, nothing really to be bullish about, and SPY was running up. So I was thinking, okay, we had a run up after FOMC. Did we gap up? No, we didn't. Not that much. I have to back it out a little more to see if we gapped up. Yeah, we gapped up a little bit. So 397. So we're up almost $7. You can't really go by range unless you go like the $10 range, because that's what's been trading at lately. It's $10 range plus. So, but yeah, FOMC, like I said, when it usually spikes at the end of the day, that usually Thursday the next day, it ends up selling off because the market has a chance to digest what's going on, and it just ripped for some reason. Still had a little hope, probably about the not raising rates down the road. Obviously, it's not going to raise rates forever. It's going to stop at some point. But for some reason, the market just like that, and or retail did, because the institutions weren't buying this. It was just nothing but low volume retail. And yeah, I grabbed it right here, thinking it double topped and it was going to reject. And I had the 4,000 puts at $5, and I took a loss on that. Not starting out that well between Tesla and this. Then I ended up grabbing puts again at 1111. No, 111, which is right here. I didn't touch it here. I think I even looked at it right here, but I didn't touch it again until 1 o'clock when I grabbed it right here. 407. What was the 407? Yeah, another area, another pivot right here. The 407. It ignored the 404. This is another big area. You can see resistance right in here, right at the 407 area, right in here. You can see with support. So wick right here, rejected. So you can see the 404, then the 407 was a big area. So when it rejected the 407 and came back down, this is where I grabbed it. At this point, it's at a $10 move from the gap up to higher day. So I was like, okay. Plus, it's a pretty big level, pretty big pivot. So when it rejected right here, I grabbed it. So I grabbed the 40-60 puts at $6, and they went from $6 to $9.70. Then I grabbed them again. I grabbed the 40-50 puts at $1 at 132, which is right right here. Well, yeah, I grabbed it. Yeah, I got this. I'm gonna pop back up. I grabbed it here. I got the 40-50 puts at 450, and they only they went from 450 to 470. They barely dropped. And then I ended up. I think that I held it here, then it popped back up, and I was able to get out here. It's slightly green, so I took it, got out. I was having a pretty bad day already. 2 losses with Tesla and SPX, and so I did get that play. So I wasn't too confident at that point. I was a little like the losses this past week and that day. I just was like, okay. Went back green. I'm just gonna take it and get out. And I try to wait for a better opportunity. Then I ended up waiting to, let's see, 302, which is right here. As you can see right here, it's flattening out right here. It's finding support right at the 405.60-ish area. Try to break down. Being power hour, I grabbed the 450 puts at 320. At 302 in this candle right here, right when it came back down, and then it popped up a little bit, then it dropped more. So yeah, they went from 320 to 610 on this little drop right here down to VWAP. So that was a nice little end of the day play right there. So very annoying week. Just I don't know, I just didn't do that well. And just the thing is that I just kept thinking that SPY was gonna dump because it doesn't usually run like this lately. It's just right here we had that little bit of a run right there, but we had some drops here and there, but we've been straight up the last few days with slight pullbacks. But at least here we pull back, we had some wicks, and it just was straight up, just uncharacteristic the way the market's been lately. So and like I kept saying in the entire video, there's really nothing to be bullish about, nothing for it to go up on. So because the big day is going to be next week when we have QT, which is quantum tightening, when the Fed starts taking the money out, reducing its balance sheet. The market was down. Let's go back. The market, they started buying down here. So they put $9 trillion in, and this is the balance sheet. It's basically what SPY is. So if they didn't dump the money in, we probably would have never made it back up to all-time high. And if we did, we wouldn't have had this, because the market, the economy is not really doing as well as the government's claiming it is. It's just, low unemployment numbers, but no one wants to work. So they were buying down here and profiting up from down here. So when they reduce the balance sheet, we're going to end up going back down to 350, in my opinion. So I'm just getting off track, but that's just my thought. I'll probably end up covering more of that when we get to the watch list and stuff like that. But anyways, Friday, didn't take any trades. Friday, just trade ideas room, SPX puts in the 408. Which is down here because it popped up and it started to come back down because it popped up, and I was using this area right here if it came back down for like a fake pop-up, but I just kept running. And to me, I did not like it. I mean, because I'll bring it down to the 4 hour because we broke out right here over this 409 4010 area. I just felt like this was another massive area. Then they had so much resistance up here. One of the trades I had that I was wondering where I took it, I think right in here. One of the days, the 20 EMA daily 20 EMA was in play, and that's why I ended up taking it there. But yeah, I'm just getting off track. I'm all over the place today. So, but yeah, I didn't want to take it. I was not going to take calls, not after the massive run we've had, and nothing to be bullish about. And this was just a short squeeze. I mean, and you had all this resistance that was ignoring. I mean, you had the the 404, the 407, then you had the 410, ignored that, then you had the 414. It just kept ignoring it. So I did grab puts at 1029, which is right here, which is at the 412 level, which is right here where it's support, which is now resistance. So it did react to that just a little bit right here. So I had the 4100 puts at 590, and then went from 590 to 840. And then I just sat out until end of day, and this is where I grabbed the puts right at 312, which is right here. I broke out thinking it was gonna be a fake out, and we were gonna dump end of the day. So I grabbed the 4140 puts at 440, thinking we were gonna dump, and it did dropped a little bit, then it popped, and I was like, okay. It was Friday of the week before the long weekend. The volume was going to be light. Not too many people were going to be playing, and retail just raised it up, just kept going. And so, yeah, this is all retail, no institutions. In fact, all day Friday, I saw a lot of dark pools and options flow for VIX calls and SPY puts. So they were loading up on retails, getting ready to slam it down because, like I said, QT is next week, and that's going to have a huge impact on next week. So, but yeah, I did not want to chase calls. I just felt like every time SPY had a run, it got crapped on, and going into massive resistance where it was ignoring the 20-day EMA on the daily, which it usually reacts to heavily, and it just ignored it, went right through it like nothing. It's not reacting to indicators, it's not reacting to support and resistance levels, and if it does react, it's very, very, very tiny, and it just ignores it and cuts right through it, and just a massive short squeeze. So yeah, this was not a very good week, and I did not want to chase it. So that's one of the reasons why I didn't trade that much this week. And hopefully next week the market will start acting a little normal. Because on Thursday, we had a lot of bad economic numbers, and it popped on that too. So very, very weird week. So that's going to do it for the recap. I know I rambled and went on and all over the place. My mind's just wandering. I got so much going on right now with trying to stay on top of everything with all the news and stuff like that. But anyways, enough rambling. Thanks for watching, and hope to see you in the room.